welcome to our daily video for December 6th. Right now it's just 5 minutes past 8 p.m. Eastern Standard Time. So let's do a quick recap of what had happened today. From last agent session till this agent session, so 24 hours, the most notable thing, of course, the GDP data from Australia missed the expectation, only coming out 0.6%. Now that's not particularly bad, but just give you a little bit context here. If you expand, by the way, in Forex Factory, the good thing about it is you can expand history. So 0.6% obviously is not as negative as negative 0.5 that we had last December. Remember back then, Aussie GDP had, when this happened, first negative number, and people were worried that if the next quarter, if it was also a negative number, that will be a technical recession. But that hadn't been the case. Heading into 2017, they're actually doing very well in the first quarter. However, things start declining, and right now we have 0.6%. So if you're looking at 2017, it's again not a negative number, but it also shows you one thing, that is it's very flat. Okay, it's very flat. That means that Australian economy is not growing. Now the bigger context is looking at the Central Bank of Australia, Reserve Bank of Australia. Basically, they are being very dovish at the moment. Why? This is the reason, right? If your GDP is not even growing at all, then there's no chance for them to hike interest rate anytime soon. And that had been the case in their company statement for the rate decision this Monday. Okay, so that means we are not going to see a rate hike or even any more hawkish talk from RBA anytime soon. And remember, in the Forex market, currency market, you are always doing a comparison analysis. So it's not about how good or how bad a particular currency is. It's when you pair it up with another currency, then you want to know if you have any sort of fundamental bias or sentimental bias. So that's the case for Aussie. Obviously, what had happened is it dropped tremendously. If you look at 4-hour chart in Aussie Newsy, it had dropped like this. If you're even looking at Aussie Yen, same thing. This is in 1-hour chart. Let me just expand it out. So this particularly candle was where the news came out last Asian session. And obviously, it had never recovered. It just ended up lower today. Now, today, of course, we have a slight risk of sentiment. Means it's a help for Japanese yen. And the reason is because the global market is still kind of uncertain. As we mentioned in our previous weekly video, right now the Brexit is still ongoing. And the Russian gate is still ongoing. And there's still heightened tension between North Korean and US. So all that had contributed to a safe haven inflow. Oh, this video just jumped out. Okay, just hold on a second. Let me put it on top. All right. So that's what happened last agent session. All the way until today, the ADP non-farm payroll. Now, non-farm payroll, 190K, it's better than expectation. NFP right now, although this Friday is coming up, is really not the headline anymore. Right? Nobody is doubting about the US labor market. This employment rate, employment change had all been very positive. What's trouble the Federal Reserve is the inflation, and that had everything to do with average earning. So if the average earning still not able to pick up, now let's expand it and to see it. So the highest we have in 2017 was 0.5%, which came out at October reading. And then we had a huge decline to 0%. So this had been really a lagging indicator or the lagging element for Federal Reserve to not able to be more hawkish as much as they want. And if that's the case, if this Friday the average earning is still 0.3 or below, then it's still a worry sign for Federal Reserve or for the market. Now, for that being said, next week, as I mentioned, we will have the Federal Reserve FOMC meeting, And right now, pretty much we have over 90% of chance or probability for the Fed to hike. That means this event right here, this event is fully priced in, right? There's no surprise gonna happen to the upside. It means if they hike to 1.5%, it's already been digested. Okay, and I keep mentioning in the forex market or any financial market, it's always about buy rumor and sell fact. So if they hike, people are gonna sell US dollar because it had been anticipated. On the contrary, if they don't hike, people are going to sell US dollar. So that means no matter what they do, most likely people are going to sell US dollar in the short run. Okay, that's just a very simple sentiment correlation with the economic release and the forex market. Another thing for today is Bank of Canada event. Now this event is really, again, not a surprise. Nobody expect Bank of Canada to change the interest rate, and that was the case. They kept the interest rate unchanged. And the accompanying statement, the market perceived as dovish, and that's why you saw a large Canadian dollar sell-off today. Let me show you dollar CAD. So if you look at, this is 4 hour. Okay, let's look at 1 hour chart. Or let me expand it. So if you look at 1 hour chart today, this green candle pretty much is where the release came out. Huge rally today for Canadian dollar. But all in all, for my micro perspective, I really don't think Bank of Canada is being particularly dovish. Okay, the reason is because remember last Friday, we had a very positive labor market and GDP data from Canada. Because of that, the market anticipate that Bank of Canada to be more hawkish. You see, that's the number. I never thought that way. Why? Because again, from central bankers' point of view, they are not looking at a particular data. I know as we traders, we always look at things in a very micro, very short-term perspective. But for central banks, they're not really doing anything. They're not going to change anything with one single piece of data. They want to wait for at least 3 months to 6 months before they make any sort of action. Of course, they will always use guidance. They will talk about things in order to influence the market. But for them to really do the action to change the monetary policy, it takes 3 to 6 months. 3 to 6 months of observation. So for me, Bank of Canada today is not really dovish. The reason Canadian dollar being sold off is because people are overly excited because last Friday's labor market and GDP data. And that's why Canadian dollar being sold off. Now look at crude oil inventory today. Large draw in the headline. Now that's obviously it's a positive element for the oil market, which is right here. Obviously didn't really do anything, and the reason is because remember last Thursday we had this OPEC meeting and people passed the deal got extended, but there's still a lot of doubt because a lot of major country is not really, they're not fully in. Okay, and you have to understand the bigger context. The only country that is fine for the oil price to drop among the OPEC is Saudi Arabia because they had so much cash, they had so much profit. They are still going to survive even if the crude oil drop at 50 or even below 50. But not so much for Russian, okay? Not so much for other countries. So they're not, other countries are really doubtful, like when is these things gonna continue, right? We are losing money every single day. So that's why market, of course, although OPEC reached a deal, everybody is still very doubtful about that. But all in all, I think the oil market is still quite supported. Of course, that's a good element for Canadian dollar. Then an hour ago, we have the trade balance from Aussie. Once again, a negative number to continue push Aussie to the downside. Okay, so that's the major news today. Of course, don't forget another thing is the Brexit. The Brexit negotiation still ongoing, still not able to reach any sort of deal or progress. And guys, as I mentioned many times, it's just a geopolitical market. Means all the economic data will have a certain effect to the financial market, but not as much as the geopolitical news. Okay, so that is the current market we are in right now. All right, so that's a quick daily market recap. Now let's get into my current trade. Today I actually took a Canadian dollar long trade. Okay, I long it. Why? Because I always want to buy Canadian dollar. You know, my existing position before today, such as New Zealand CAD, which many of you know, I took the trade at here, 50% Fibonacci. And then my stop loss is right above here, okay, above this swing high. So I'm still 4-hour chart, I'm still holding this trade, and I'm very confident about this trade. Okay, I'm gonna let it play out, but I'm not moving my stop loss to here. The reason is because we haven't break this low of 86.42. So unless we break this low, then I will move my stop loss. Otherwise, I like to be more conservative, especially right now in the December market, where the liquidity is kind of thin as we head into the holiday season. So this was one of the Canadian dollar trade I'm already in. Another one is dollar CAD. Now dollar CAD, again, I was doing a 4-hour chart, and I got in. Basically, you have to look at the bigger picture. Okay, the bigger picture is here. So I got in dollar CAD, I think last week. You know, this was a downtrend, a retracement at 50%, again at the pink line here. Then we have a double top. So I got in dollar CAD basically at a breakout trade when it breaks this pink line. Now, obviously, I'm in a drawdown right now. Okay, and the reason I got into dollar CAD, as I mentioned, my bullish reason for Canadian dollar had been very simple. Bank of Canada is one of the only central bank among eight major currency, 8 major central banks. One of the central bank that had been able to hike interest rate in 2017. The other two are Federal Reserve and Bank of England. Bank of England hike interest rate as a one-time deal, and also they hike interest rate not because their economy is doing well. They hike interest rate simply because their inflation was too high. And the reason inflation was too high because their currency depreciated largely. So that is not a good reason to hike interest rate. The best reason to hike interest rate is because the economy is doing well. It's kind of overheating, so you want to prevent it to heat it up too fast. So you want to hike interest rate. You want to basically adjust the inflated level. You want to make money more expensive before it gets out of control. So the only two central banks that had been able to do that had been the US Federal Reserve and Bank of Canada. And right now, US, even though with the tax reform last weekend, I was really expecting a huge shoots up for DAX to 95 level. That was not the case. Okay, as I kept mentioning before, if a currency or a stock or any kind of instrument react kind of weirdly in front of a good news, so supposedly there's a good news and the currency should react well, but it hasn't, then you have to worry, because that means there's more seller than buyer. So because of that, I'm actually kind of worried, thinking that, okay, with this tax reform deal, such a good news, actually the only good news from Donald Trump's administration in 2017, this is the only good news, we still haven't able to reach 95. That means there's a lot of there's a lot of seller interested to sell US dollar. Because of that, I like to basically sell dollar with this kind of momentum. And the only currency that I think has the fundamental strength to go against US dollar is Canadian dollar. Now, obviously today, because the Bank of Canada event, you have this large retracement. For me, I'm not too worried about it, because if you look at this trend line, we are still just right at the edge. But again, this is just a technical entry. I'm really making my decision with fundamental and market sentiment. So for me, I'm still going to hold this trade. Obviously, if it goes up to touch this double top again, then this is no longer a double top, and that means my analysis is wrong. Okay, and that's just the case of any trades. You always have to be able to accept loss. But for me, I'm happy about my analysis, even as for now, Even today, people on market perceive Bank of Canada to be dovish. I really don't think this sentiment is going to last too long. On the contrary, I think we will resume to our downside movement, with one exception. That is, if the non-farm payroll this Friday is very positive, if the average earning is 0.5% or better, that will give US dollar a tremendous push. Then we might get stop out. Okay, so that's something, that's a risk in this trade. So these two Canadian dollar trade I'm in, and today I took one more trade, which is Aussie CAD short. So originally, I want to short Aussie out of the negative GDP number. Okay, so the GDP number, as I mentioned, it's not that negative, but its reading basically shows that there's no chance for RBA to hike interest rate anytime soon. Because of that, Aussie is supposed to be a neutral currency, but because of that, quickly take a look at the commodity market. Copper, iron ore are all in a slightly downtrend momentum. Now, because of that, I want to sell Aussie. Originally, there are two possible pairs. I either want to buy Euro Aussie. You can see I actually draw a nice red line here. So I want to buy Euro, and if I did it, get into Euro Aussie, actually I have a much better momentum trend right now. So I want to get into Euro Aussie originally because Euro is a neutral currency right now. And especially right now when US dollar and British pound both have a lot of geopolitical uncertainty, makes Euro to be a more attractive currency because it's stable, it's safe, right? Even though ECB is more dovish than Federal Reserve and Bank of England, but all in all, geopolitical speaking, Eurozone had been quite safe as for now. Okay, now people might say, what about the German German election? Like they haven't been able to form a government. It's not really a big deal, to be honest. Even if they run the snap election, I don't think it's bad for Merkel, because right now, if the German people realize this is the situation of the politics, that if we don't vote, okay, even maybe we don't like Merkel, but if we don't vote, then if we don't vote for her, she's not going to be a majority. If she's not a majority leader, then we don't have a government. Then things are really just not going to function well. So I think even if they run the snap election, it will actually be a much bigger win for Angela Merkel. So it's not a bad event for Eurozone right now. So because of that, Euro Aussie was the trade that I'm planning to take. Obviously, I did not take it, but that was my setup. Then I think about taking Aussie yen. And the reason is because I always want to buy Japanese yen in December, especially this year. The notion is, as I mentioned before, I think we're heading to holiday season, Christmas. There will be more geopolitical uncertainty. I think there will be more terrorist attack. I don't hope for that. Okay? But unfortunately, I think it's going to happen. I think the North Korean tension is going to escalate it. And I think the fact that it's a holiday season, a lot of institutional traders and big investors are going to park their money in a safe haven currency. So they're either going to buy gold, Japanese yen, or Swiss franc. So I think there's enough correlation to push Aussie yen to the downside. And that's also the case. However, we couldn't get a retracement, right? This was, I put a penny order right here, and we couldn't make a retracement. Then Bank of Canada happened, and I realized this is a good event for Canadian dollar to be sold off, so I can actually take advantage to buy it. So that was the case. I wait for this green candle, and I draw this Fibonacci line, and basically got in at this red line here. So this, I'm happy to get in because I think right now 50% we did retrace here, but I think that's it. I think this trade is going to reverse to the downside because, as I mentioned, today for the Canadian dollar to be sold off, it's just a short-term momentum. Okay, the underlying fundamental strength for Canadian dollar, it hadn't been changed yet. Okay, so nothing had changed. But we had a rally today for Aussie CAD. It provided me opportunity to sell it. Okay, so I'm in this trade right now. That's my order. That's my entry, 96.59. Stop above this recent hourly high at 97.95. I'm targeting 94. Okay, it's a very risk reward 1.8%. Sorry, not percent, 1.8. So this is my trade right now. Okay, so my all other trade are still in New Z CAD, as I mentioned. I'm still in this trade. Dollar CAD, I'm also still in this trade. The other one that I'm still in is dollar yen. Now, dollar yen, of course, it's a very long-term perspective, right? I got in at 50% in an 8-hour perspective. Why do I use 8 hours? Because I don't want to get caught up in this kind of safe haven inflow within the holiday season. Okay, so as I mentioned, I do think Japanese yen will go up in the next few weeks, but all in all, I still think US dollar is much stronger fundamentally. And when I see this kind of retracement to a good 50% area, I want to take this opportunity. So I got in at here 11119. So basically the low of low, since September. Okay, and I'm just going to ride this trend. This is most likely going to go into 2018. All right, so I'm not really in a hurry to change anything here. Another one I'm still in is cable and the euro pound. Okay, so British pound obviously is not, like, if you're not in British pound right now, and unless you are a day trader, that means you are in front of your computer every day, every minute, every hour. Of course, that means you are a full-time trader. So unless you're a full-time trader, then you can trade British pound. But if you're not a full-time trader, if you have a job, if you cannot be in front of your computer, I would not recommend you to touch British pound because it's too chaotic. It's too hard to predict where it's gonna go. It's such a geopolitical based currency. You have so much rumor going on every single day about the Brexit negotiation. So unless you are in front of your computer and you have a very nice information feed, maybe you are signed up to Reuters, sign up to Rain Squawk, things like that. Otherwise, you would get killed in this kind of environment if you are not able to be in front of your computer. So personally, I got in way before, like 2 weeks ago. Right now, I'm just really looking to get out of euro pound. Although I still think euro is stronger than British pound, but all in all, it's not a currency I want to trade in a swing set perspective. So I got in last week again right here, 50% area. My stop loss is you see, my technical setup is very simple, right? It's nothing complicated. So I really just banking on this. I was getting in on this trend. Okay, this Fibonacci. Oh, it's not coming out. Just give me 1 second. I was banking on this Fibonacci trend, and then I got in when we have this kind of retracement. So I got in at 50%. It had worked initially, but it reversed right now. Same thing happened to cable right here. Same thing happened to cable. I got in at 50% here. Now, obviously, this is not my stop loss. My stop loss is here. So again, this is another higher degree time frame, 8-hour swing setup. Okay, so I got in at 50 here when it basically reversed, and I was hoping this to go into the downside, but a lot of pre-exit negotiation, ups and down in an 8-hour perspective. So I'm really not looking to hold this trade. I will looking to get out at break even. Okay, if it can come back to where I got in, I will get out. Same thing apply to euro pound. If it can come up to where I got in, I will get out because I don't want to get into a swing setup in the British pound at the moment. Doesn't mean you cannot trade British pound. In fact, if you are a day trader, British pound is very, very good to trade because you are in a ranging upside down market, upward and downward movement. Very good for day trading. So if you are a day trader, that's great. But I know most of people are not. Most of people have a jobs. They're doing this for swing trade setup. Then try to avoid British pound, unless we have a further confirm result of the pre-exit negotiation. Okay, guys, that's it. That's market recap and my live trade. So I'll be back tomorrow with another daily video for you. Again, you have any question, feel free to email me and I'll be more than happy to answer it. All right, thanks for watching. Bye-bye.